October the 15th, you're looking at the quick disclaimer. In this video, I'm going to go over Occupy Wall Street, the banking system, as well as a few silver charts, and really not that many. A quick look at the daily chart, as well as a brief look back at this last drop in silver compared to the one in 2008. So let's get started. And we'll start this with Occupy, insert city. You can put Occupy Wall Street, Occupy Chicago, Detroit. Well, there's so many at this stage that is pretty much an occupation within the world, that is. And okay, let's just stop and re-say this. I recently seen a video from Raw Dog that I found interesting. This was last week, where he was stating that this Occupy movement is basically a waste of time, and I disagree on that. But he had some really good points that I want to go over, and I'm going to do that within the next 4 points, as well as following through within banking. One of the best things that may result from this occupation is the increase of population more aware to our current economic and political culture. If this grows very big, then it will be too big to ignore. And when I state too big to ignore, I mean this on a scientific level, that it will be too big to ignore. Because from my research and understanding of macro consciousness, when there's a large percentage of one's thoughts, actions, and doings to one particular thing, then it cannot be ignored, and it's going to create whatever it's supposed to within that action, reaction, cause and effect type of cycle. So that's why I say it's too big to ignore. We've already seen this a little bit, as it was ignored for the first week or two within the mainstream media. That is not the case. Now that is. Although it's ignored less, but the more aggressive they go, the less they can ignore it. Now let's move on. Although possible, it is very unlikely that the occupation will make the changes that we are all demanding. I find it only a bonus if it does, because it's most likely not going to do it. People standing on the streets, marching, and then you have the bankers that are pretty much just laughing as they're watching, or whatever. I don't know what's really going on there. But it doesn't seem logical that from people protesting in many cities, that the changes that they are going to do are the ones that you want. They might think of different strategies within it, and that I don't know what those would be, but it is unlikely they're going to end the Federal Reserve System just because there are thousands upon thousands into hundreds of thousands, maybe, or tens of thousands, whom are protesting. If it is the bankers that are the problem, then the solution has to deal with them. To end the fiat/debt-based systems, the solution is to say goodbye to your banks. And I was just going to put the Fed in there, but I have to make it clear for those people who are not living in the United States. Ending the Fed is ending pretty much the fiat system in general, as that would affect every single central bank worldwide. And that's why if you have the thinking, oh, it's an American problem, no, it's a global situation. Final point. There is not enough people awake and or active to make the changes happening via saying goodbye, and the occupation may wake enough up. So this is where I think it could work out very well. Because if we do any type of situations, or we just want to ignore the banks, as Raw Dog's mentioning, that's the problem. Just say goodbye to them. There's not enough people right now that are doing this. So the solution at this stage is not that run of a bank, but at this point is part of the awakening. Okay, I did some writing on this part here, and I'm just going to read over this. And in blue, it states, insanity is doing the same thing over again and expecting a different result. In a world in which we have an end to a fiat debt-based system, as well as seeing evidence in having corruption, manipulation, persuasion, etc., 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 from the few unknown individuals within our economy/culture, would be extreme. That's a large change. That's what I'm pretty much trying to point out here. Extreme states, it's a large change. Unknown individuals, and I really do truly believe this because what are the names of the people that decide what the Fed really does? I don't know, nor do I really want to know. Transitioning to some other economy that is radically different would be that of an enormous change that is 100% likely to be noteworthy for the long term history books for the 22nd century and beyond. Therefore, by using this opening line, I can assume for there to be a radical change of many degrees that people will have to stop doing the same things over again. Much of your everyday lifestyle has to change. Most of your everyday lifestyle has to change to have this world change. Okay, bad grammar, whatever. The Occupy Wall Street movement is something that is completely different, as we have thousands of people who are going on their day to day lives much differently. These protesters worldwide are spending much or all of their days socializing with other Occupy Wall Street protesters and making a difference. And when I say the difference again, the difference productively on a conceptual level is mainly awareness, in my opinion. But on a scientific level, it's changing your physical being. So instead of waking up and doing the what some people call your sheep day-to-day operations, actually no one does that, other than maybe the sheep word, then that is a big change on that situation. It is a challenge when you try to do something for the first time ever, and usually the first time is a failure and huge success. It is a failure because the mistakes and missed opportunities can mount, but as humans we learn and move forward. The winter will serve as a large challenge, as the weather forecast from Webbot is not good, and there is no way people in New York, Toronto, Montreal, Chicago, Boston can handle 0-degree days or 2 feet of snow, etc. There's so many bad days. And even in regular winter conditions, it's never fun anyway. Most likely, this will be the wake up call, and Occupy Wall Street will fade away as U.S. Thanksgiving arrives. And I think the U.S. Thanksgiving is the last Thursday of November. And another stutter. Therefore, when I take a look at this situation as it mounts higher, the Occupy Wall Street, that is, more and more people seeing what's going on, I think there's a good chance that'll help wake people up. But like I said, the weather is really bad. It's the first day of Occupy Canada and many other parts in the world. And in Toronto, the weather is not too kind today, as it's been very cold and extremely windy. And there's going to be many bad days like this, and it'll be interesting to see how they're able to handle the elements, that is. And now I want to go over a thing called bank runs, and I have a thing on the top. Don't get involved in the run. When the run is on, those who are already prepared can relax a little. I don't know, just have some fun while everyone else stresses out. And I don't want to say it in that type of way, but it just seems that the realistic chances that a bank run is going to appear is pretty much guaranteed. And it's been a matter of not if, but when, at least in my book for years now. And the when seems to be closing every day to a possible situation where you may be too late. I have two different steps within here. One is accumulating paper rectangles, and step two is distribution of the paper rectangles. Paper rectangles are that of, well, they don't have this shape. They're rectangular. In the United States, it says Federal Reserve note, and a lot of them will say this note is legal tender. Whether that name will ever catch on, I think it has a good chance. And on stage one, you have different situations like closing your account. This is not easy to do. There's reasons why. One, you might have a job, and if you have a job, you really can't close your account because payments are automatically entered to your account. And you could be in debt. If you're in debt, then again, you really can't, you're not allowed to close your account, I don't think, anyway. But if you can't close your account, keep your account in low balance. Basically, I think all the all the money that should be in your bank is something you should be able to afford to lose. Basically, consider it like a gambling fund. And if you're okay losing $300 at your local casino and you can laugh it off, well, then that's what should be left in your bank account. And I say that because inflation at any time can come in and just not really inflation. I don't like that word so much these days, but maybe the acceptance of fiat currency being taken in. We'll talk about more about that when we get to step two. Next one, and this is more Morning Mayan was mentioning this. Pay off debts, ignore all debts, and I have to tend to agree. And I don't want to give any type of advice, especially on the ignore section. But if you pay off the debts, that means you can easily do this section here, which is close your account, and basically you can ignore the bully, if you will. By ignoring all debts, then you're putting yourself at risk that they might really bully you, basically, because I know the system is all that. But if enough people actually did this, and if maybe debts are all going to be forgiven at the very end, or then that might be a situation. But at least it's something that is doing different things. If you look at the debt-based system, we know how money is created and how debt is 100% guaranteed. So that can be a form of rebellion. Again, I don't want to give any suggestions. Figure out yourself what is best to do. I'm only offering ideas. Stocks and bonds. They're still cash because, well, bonds is pretty much just that of cash. Now, stocks, some say it isn't, but the only thing you can sell stocks for is that of cash. Therefore, if that's the case, you have to do this section before you withdraw. Final point is day traders slash chartists. And one of the things I was thinking about in 2009 is that of an exit strategy, because at some point that game is just no longer going to exist. And then if you're in that situation, maybe you might want to decide, this is only an idea again, that it's time to get out of the game. And you can still play this game, that you can play it on a physical level. You can gold, silver, copper, palladium. You can buy and sell the real stuff. So you can still play the charts, but it's not as easy. And maybe the whole system will survive. You know what? I don't know. Step 2, distribute paper rectangles. Find out the short and long-term needs. This is for yourself, and develop a strategy in obtaining these assets. This will be easier to do if the bank run has yet to occur. Gold and silver are good long-term methods, but by using critical thinking, using creativity, there are many other methods of use. During a bank run, this stage will oftentimes be unplanned and the cause of hyperinflation. And I just said I didn't like that word and I wrote it in here. Okay. Unplanned means that if there's a run, the bank machines are going to go empty. Tellers aren't going to be able to, well, I'm not going to say tellers can't handle it, but the lineups at the bank will not only be at the door, but maybe a block or two from there. And they're going to run out possibly bank machine or the Interac cards, as they're known as in Canada, or using your just bank cards to use at stores. Debit cards, I think, is another way of using that. That will be used a lot higher, and if that's just going to cause a lot of chaos within it. And it only sparks a day or two within a bank run, and then 3 or 4 days, boom, it's in large proportions. I don't know when this day can occur. I know that its time is running low, but it might not even be this year. It might even be in the next year. I doubt it'll be 2013 now. It doesn't seem as if there's that much time left. And if you've have done this before, there's crowds of people and you can relax a little. That is when other people are getting to the bank, trying to get their money, trying to sell their stocks, trying to get out of their bonds, trying to get their cash, and then they have to go to step 2 because they realize that it's losing value. At least some of them will. There's going to be a huge run for gold and silver. There's going to be a huge run, even maybe a bigger run for real assets, food, water, you name it. That's uh, that's why if you do have this ready now and you see everybody else scurrying for things, you're already ready basically. Now let's move on to the charts, and we'll basically make this a 20-minute video now. And we'll start off within the daily chart. And the SLV volume is on the top, and this volume last week was exceptionally tiny. Not going to make any more notes other than that. And this was just out of control volume, which occurred as this market was falling lower. Some changes have been made to these moving averages. There's 4 lines in here, which means the red line, which has never been on here before, that has been added. That is a volume weighted average price since the market topped at $49.81. At that point, it had a little bit of time playing this area as support, but was unable to break above it and obviously went below it. The orange line is a front-weighted 50-day moving average. This 50-day moving average is front-weighted by taking its current date or current price, multiplying it by 50, the next one by 49. It's a somewhat advanced calculation, but it puts more emphasis towards the newer dates. I find these averages to be better than the regular simple moving averages and the exponential moving averages. And a purple line, that is the front-weighted 200-day moving average, and the blue line is the volume-weighted average price since the market broke out at the exact first tick of this chart, which is on August 24th, 2010. Okay, we got all that aside. Now, these moving averages are in a major cluster area. Now, I haven't seen a cluster of moving averages since, well, before this started in August of 2010. Now, it hasn't been doing it for that long. It's only been about 4 or 5 months. But it is still a decent amount of time, regardless. And a lot of it just tells you that this is that little area that it needs to clear for us to have really any conviction whatsoever on a technical level. And the best way of explaining this, people say, well, technical analysis doesn't work. And it gives you a mathematical guideline stating that if this market is going to go higher, then this assumes that you're going to get in here somewhere if you choose that method of trade. And if it goes up to 120, 100, and 140, you are bound to get an entry point at some time along the way. There's other different methods just waiting for hit a certain area on weakness, and that's where you hit. I like Fibonacci for that. There was an area here where you could buy, and there was an area in here. Of course, this one here was a very brief situation. Literally, it was there for even below here for maybe an hour tops. So it wasn't that long. And most people in North America were sleeping at that time. And this area of Fibonacci was key support. This is the biggest one right there. The odds that it does hold this overall should be good. Now, because it's a manipulated market, then that can obviously give you a lot of concern for the fact that just maybe we might have a little test below. And that's why I've talked a lot about the disconnect situation within the physical market and the paper market within the price action. And the lower this goes, the larger the bubble by definition is going to hit. And the bubble is when the price that we're told, which is what you see on the right hand side, or the $31 price you're looking at, or whatever it happens to be, is in major disconnect within the true real value of within. And because of that, that's why I state the bubble to be burst, and that usually causes explosive moves higher. Okay, it's going to be longer than 20 minutes now, probably 23. But let's now move on to the comparison of 2008 and 2011. And what I want to be comparing is this sell move within this sell move. Because when silver back in 2008, it went from 21.35 down to 8.46. And then it took a while, but it got right back to where it was and higher. So if you were like myself and bought in here, and even for that matter bought this breakout, then you ended up taking a little bit of a hit short term. But if you never sold it, you still had the same silver you had before. And today, the prices that you got were obviously much cheaper. So can the same thing be said for here? I'd have to say yeah, meaning if you bought here, are you still going to work out and have a gain, that is, as long as you hold up enough time for the thing to develop? And I think the answer for that should most certainly be yes, given the fact that we're in a bubble. So now let's just draw this up, and I'm going to move this on to here. And this is what we got. So the purple price, this isn't what the price is now, but in relevance for the 49.81 top and the 21.35, this is a matching relevance to the bunch basically. And it's somewhat similar on the sell-off in here because the selling in 2011, which is this year, was more violent on the original cycle than it was in 2011. The support, in 2008. The support in 2008 was the resistance this year. So there was a little bit of a difference, but it, as Mark Twain says, history often doesn't repeat, more often it rhymes. And there's a situation where you can see for that to be the case because it took the same amount of days for the fake out to occur before you most likely have the next fake out, which is the one that we're currently running now. If we continue matching within time, then it looks like we're going to have a pretty big week to the downside, and then boom, maybe do something like this. Now, if we do hit here, then what that means is we would go back to the previous resistance from 2010. That level of resistance is roughly at about $19 per ounce. $19.50 or so. That is the level of resistance if, of course, it matches at that level. And right now, with the Webbot predictions talking about Shocktober, and it hasn't been much of a shock yet, the weeks that I'd be looking for is the final 2 weeks, because I think it was JSNP4 mentioned the Monday of the final week, which isn't this Monday, but the Monday following, for there to be like, oh, there's the shock right there, if you will. Well, here's the deal. If you ever have a week where things just collapse, capitulate, the week before, there's usually a story that's going to tell us that it's going to happen. And we really didn't get much of a story this last week. So what I'll be looking for this week is a possibility of some decent retracements, and probably even silver, gold, the stock market, so many different things that's really going to spark the fuse for the end of the month. Again, Webbot's been off many times before, and sometimes the predictions of dates, and I'm the biggest one on this. Well, maybe not the biggest, but trying to figure out the whens, that can be extremely difficult. But if you know the ifs and not the whens, then you're in fine shape. You just wait every day and just live each day like it's your last, or basically do what you got to do. Okay, I've been talking for way too long, and I'm going to just say goodbye now. Goodbye now.